You must be silent. You must say nothing. Say nothing about the present situation in this city. Say nothing about hunger. Say nothing about jobs. Say nothing about pay. But those in greener pastures, they may speak. They may raise their voices. But here in the smoke, you men and women, you must hush. I will not be silent. Never. No silence for me!
Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Often imitate it, never replicate it. Guys, my high-speed internet, my fiber optic should be restored this week. Until then, I have to record this on my laptop, travel to the closest town to upload for Lee the things I do for you guys to get this video out to you. So hopefully next video, I'll be back on camera. If you notice the introduction, a little bit political in this introduction, and that's because I believe the election that's coming up November 5th here in the US is the most important of my lifetime, and I just turned 46 years old. Guys, if you don't like the way things are going in the country, you need to vote for change. The last 4 years under Biden and Harris have brought crushing economic policies, 40-year high inflation, to the point where every single U.S. citizen at the time of the pandemic was responsible for $70K. Lee, give me the chart. $70K owed to the U.S. government. Remember, the government doesn't produce anything. It can only take. It takes from its citizens. Now, due to the reckless spending and inflation from the Biden-Harris administration, every single one of you owes over $105,000 to the U.S. government. You're stealing future prosperity from the next generation, your kids. That's who's being stolen from. We have 40-year high inflation under the Biden-Harris administration. Lee, give me trueflation. Almost 26% embedded inflation in every single thing that you buy. Another way to look at this is if you have a household income of $100,000, right now your household income, your purchasing power is $74,000. You won't hear that on Bloomberg. You won't hear that on CNBC because all they want to focus on is what? They want to focus on the rate of change. Inflation's down all the way to 2.5%. That's not the embedded inflation, the crushing cost of buying everything you need to live. Wall Street Journal ran an article, grocery prices are up 30% on average. Lee, give me the business news. U.S. consumer confidence plunges to worst numbers in 3 years as Americans grapple with inflation. And I showed you guys this Fred chart last week. Lee, throw up the Fred chart. Look at the U.S. savings. The average household savings is back down at the GFC levels. U.S. credit card debt is up at all-time highs. We just had a natural disaster, Hurricane Helene, which destroyed so many people's lives and literally took lives. Over 150 is the body count now, and they still had over 1,000 people missing, people's homes destroyed, people's businesses destroyed, their livelihoods, their families destroyed, and Kamala Harris landed finally after 5 days to announce that FEMA is going to give everybody a $750 check. Well, that's fantastic. That doesn't even pay for my Starlink, my backup internet that got ripped off my roof and shattered on the ground. Doesn't even pay for that. U.S. citizens should come first. That's the purpose of the government, to protect and serve its citizenry, not to give $100 billion to fund proxy wars halfway across the globe that don't concern us. So that's my political rant, guys. In the beginning of that intro, the pictures of homelessness, the utter decay of that area. That's Kensington, Philadelphia. My parents came from Philadelphia before they moved to Florida, and they remember hanging out with their friends in high school in Kensington. And now look at it. So many of our cities now look like third world countries. They look like shitholes, open toilets with open drug use, prostitution, people sleeping on the floor, on the ground, defecating on the floor. It's just disgusting. That's what San Francisco looks like. There's parts of New York City that look like that. All of the big blue cities in our country look like that. So again, if you want to vote for somebody to change something, well, then how about you actually vote for change and not continue the policies that are crushing this country, that keep their boot on your neck, okay? One other thing to consider as traders, Harris has proposed a doubling of the capital gains tax. So all of you that invest in trade, she wants to bring that tax rate up to 39%. Almost 40%. So anything you profit off of trading or investing, this is after you pay your federal income taxes, they want another 40% of that to fund their pet projects and their wars around the world. I think you should put an end to it. Make sure you are registered and make sure you download your absentee ballot, request an absentee ballot, vote early. Let's make some change in the country, guys. And now that I've had that rant out of my system, man, I wish I could have had the camera for that. I have that rant out of my system, guys. We need to talk about what's happening in the markets because we have some pivotal timing coming up in the markets here on my screen, looking at the S&P futures. So you guys have probably seen, I guess FinTube is all over the place. Half the people predicting a crash from here, half the people saying new all-time highs. But I want to talk about real quick the cooked jobs numbers, because we talked about that last go around, last video. I said, I don't know what the number is going to be. Remember, the street was expecting 150K. Citibank had 70K, and the highest number was 220K on the street. We got 250K. Immediately when that happened, everybody on the Discord was saying, this is bullshit. These numbers are cooked. We all knew they would be cooked, but there's actually a reason for that. And Zero Hedge wrote a fantastic breakdown looking at the household survey as well, comparing it to the government non-farm payrolls. And Peter Schiff broke this down excellently as well. Lee, go ahead and roll this quick clip. We'll talk about it on the other side.
In fact, according to Zero Hedge, but for the surge in government employment in the month of September, if you just back that out, right, and just maybe it was just a normal month, according to Zero Hedge, instead of the unemployment rate going from 4.2 to 4.1 the month before the election, it would have spiked all the way up to 4.5%. Now, that is a headline that the Harris administration does not want to run on. And so conveniently, we've had the biggest government hiring boom in history that was able to bring the official unemployment rate to 4.1.
We had record all-time hiring, record. The month, that 1 month in September had the most government employees hired in the history of the country. How apropos 30 days before the election. According to Zero Hedge, as Peter Schiff said, if you take out the government hiring, unemployment goes from 4.2 to 4.5%. And there's no way in hell Harris was going to run on that. So these jobs are either fake or the government actually hired all of these people. But you know what? It doesn't matter because it won't be revised till down the road, months down the road. Then they'll revise it and the market will have already traded on that information. And we got this big rally. So let's talk about some timing cycles that are happening right now because the market did rally on the number. It was suppressed most of the day when it was released and then rallied into the close. I want to show you guys this on a weekly time frame on S&P futures. The key timing cycles are kicking in here. One thing I want to look at is from our corrective low of this cycle, which was October 10th on the weekly time frame 2022. All the way up to next week. Okay, next week, we have a 2-year cycle completing 104 bars here on the weekly time frames. You have a 2-year cycle completing on this next weekly bar. And of course, from the top in January 2021 to next week as well, we have a Fibonacci pivot of 144 weekly bars, just over 1,000 days, 1,008 days. That also equals 34 lunar cycles, okay? A double Fibonacci pivot, 34 being a Fibonacci number, 144 being a Fibonacci number. So we have multiple timing cycles or smaller timing cycles as well kicking in here. I can show you, such as from the April, what is this? The April corrective low of this year coming out to next week. That's going to be 180 days when you count next week as well. It's going to be 180 days. And this is part of the wheel here for the spring equinox, fall equinox. Oftentimes you see these pivots expressed in numbers, 180. That all happens next week. And guys, when we talk about the spring and fall equinox on the left side of my screen here, I'll be making a cycles video on the Discord. If you guys are interested in that, by the way, consider joining our Discord. You can click the join button right there on YouTube and try it out. But consider The spring equinox and fall equinox have captured the largest tops and the bottoms and the biggest market crashes and biggest market tops in history, including the breakdown in 1929, right after the fall equinox. These moves happen within 3 weeks of the spring and fall equinox. And if you look at .com, spring equinox of 2000, market peaked. When did it bottom? Just after the fall equinox in 2002. You look at the GFC, just after the fall equinox, October 11th, the market peaked. And when did it bottom? The spring equinox, 2009. And then if you look at events such as the pandemic, when did that happen? You got your market bottom right here in the pandemic, just 2 days after the spring equinox. Key market pivots. And where are you coming up to right now? You just had the fall equinox. I think it was September 21st this year. So you're in that time frame of the 3 to 4 weeks after the fall equinox where you can be looking for a key pivot. So we're going to look at this zoomed in on the charts as well to see where we can land. And I'm about to make my downside target video, but I'm waiting for the markets to top. I take my downside targets very seriously. If you guys recall, back in the fourth quarter of 2021, I made the Bitcoin downside target videos multiple times when everybody had 250K. I gave you 10.5 based on the Bitcoin top, and it took a year and Bitcoin fell over 70% to 15.5. So I take my downside targets very seriously, and I think I know where the market's going, but I want my Fibonacci confluence. So that video will be coming out after we have what I consider to be a market top. Something I want to show you, a couple guys on Discord keep beating me up over not showing the HYG. HYG is high yield bonds. I want to show you guys something. So when you overlay this, right, this means nothing just looking at the chart. If you're not invested here, overlay this with something such as S&P futures. And you can see how closely this tracks. Look at your peak here. S&P's in green. Look at your high yield. You peaked, you sold off. What did the S&P do? Sold off, right? And then you have high yield going up, S&P going up. I guess I should have made this a different color. But you can see this here as well. Here's your bottom. High yield goes up, S&P goes up. Look where you are right now. High yield, weekly time frame, bearish engulfing bar, S&P looks like it's starting to roll over, okay? This is just another confluence factor to track here in the marketplace. And if this does start to roll over, I want to look at it here from this base, this fractal low, to your high. If it comes down to 77, which is a 618, guys, the S&P is going to be turning down with high yield. If it starts rebounding, then it starts rebounding. But what are the indicators saying? You have bearish divergence here on the money flow. Here's your peak on high yield. You see this? This was right here on the charts. And then you've had lower highs and the money flow, the volume weighted RSI. What has the high yield done? Kept going up. So you have some bearish divergence on the weekly time frame, momentum starting to key and roll over as well. I want to look at the top here in 2022 again, because we talked about these targets and patterns that the S&P makes. I think this is very important. And again, the 2022 top, you guys have seen the GFC pattern multiple times. Not going to bore you with that again. But if you're new to the channel, go back and watch the last few videos. You'll get some information out of that. What's the key reversal pattern, guys? Nobody understands this on YouTube. The W pattern. Where's your key reversal pattern again? The W pattern. 2022 on the left, 2024 on the right. Don't sleep on this pattern, because look how this broke last time. It broke with a high, right? Just like you got here. And then it made a false break new high before it capitulated on its way to fall 28% in 2022. This false break pattern happens over and over again. It happened right here. You had your fractal high, as you can see there with the green triangle. You made a slightly higher high and then capitulated for this retracement. I would not be surprised to see the same thing if we take out this fractal high of 5830. Remember, my higher level target, 5900 to 6100, that false break could take you up to 5900. We're going to look at this zoomed in on some charts. But let's look at the bigger pattern here. Our ABC, our equidistant waves, 15.25%, 15.25%. You can see see the equidistant waves movements here in the charts. Takes you to 58.77. I've been rounding it up to 5,900. And this would be the false break if it comes up here, makes a top, and fails, okay? If it proceeds to continue to our 6,092 target, which I've been calling 6,100, I don't consider that a false break. I consider that a new leg, right? So if you came up from your fractal low here, up to that 6,092, it's a 6.5% move, 371 points. That could happen, guys. It could happen. But the thing is, you have to take out this fractal high here on the S&P futures on the daily time frame, 58.30. We rallied into the close. And when you look at this, this is so similar, this setup. I mean, you can't get over how close this is to 2022. Look at this. You're rallying. Let me expand this a little bit so you can see this. You're rallying back up after selling off. Right now, you have the formation of a double top, right? A three-wave pattern. Your wave up, wave down, wave back up. Does it fail and capitulate, or does it break slightly higher, then capitulate? And that's what we're looking at, because that's the pattern you do over and over in these charts, guys. So when you want to look at this, we can pull a fib from that fractal high on the daily time frame to that fractal low. You almost got up to the 786 at 58.07. You want to watch that between 58.07 up to 58.30. If you take that out, then you want to watch your next level, which happens to be the 1618, pulling the fib this way as well. A lot of confluence there. 58.95. 5,900. This could be your false break to the upside, doing a move like this, topping out, and then capitulating back down. If you go on to 6,100, then you're moving up further. I don't consider that part of the false break. It's just a new leg. Who cares? It's semantics. But those are the upside targets. But this is the battleground. Can you hold below 58.30? That's the key to consider here when you're looking at the charts. You look at the money flow, you came down to the median line, you could turn back up. You're still slightly hinged to the downside. Momentum still bearish below the long term. When you look at this again on a weekly, let's look at this on a 3-day, see what this is looking like. You have a lot of bearish divergence on all the indicators. You guys know this that use RSI or any of these other indicators, right? You have a high here in the money flow, lower high, and of course a lower high, and price kept making higher highs, okay? So you have bearish divergence in large time frames, momentum divergence as well. Let's bump this out to the weekly to get a good look at this. Remember, this is the largest market in the world. Look at the weekly. I mean, the weekly has a lot of bearish divergence, right? Look at this. You can just draw a line straight down, and you're hinging towards the downside here. So again, don't sleep on that key area, guys. This is a key area in the market if you stay below 58.30 or break slightly higher. Let's look at this on the SPY for those of you that trade the ETFs, because it works out the same. So I don't cover the SPY on YouTube. I do cover the SPY in the Discord, guys, but it works out the same. I look at my targets. Look at the pattern that you made. A bearish reversal pattern, a W pattern, right? So it's all the same on these indices. Pull your fib from the midpoint down to that low. You can see you have the 1618 slightly higher at 579.50. Let's call it 580. You're struggling right here around the 1272 with chop. So 580 is your immediate target to the upside if you can take out what? That fractal high. That's your immediate target. So let's see what that fractal high is, 574.71. And just like on the S&P, you can measure your W from the beginning of the W to the deepest retracement, and these levels shift a little. You still have the 580. Now it becomes the 1272, right? So you still have 580, key level. And then what is the blow off top target if everything just rallies here? Remember, I'm still looking for October tops for the S&P, but if everything rallies for the next couple of weeks, what's the blow off top target? 599, 600 on the spiders, okay? That would be your blow off top target. Looking at this on the Dow, you have the exact same pattern, guys, your W pattern across the board here. Measure this the same way on all of them. Midpoint, fractal high, down to that retracement low, 42.7. That's where every single candle has been stacking below. No closes above it, right? Stacking below. Big bullish candle here on the daily time frame. The blow off top target, if you take out this fractal high of 43K, the blow off top target is going to be 43.6, which again we capture from the beginning of the W, 43.607. One thing to note here when you look at this on the daily time frame, looks really bullish, right? Bounce out to the weekly. How'd that week finish up? Look at that. nice red hanging man candle after a doji. You call that a spinning top. Doesn't matter. They're all dojis. Dojis all mean the same thing. Could be continuation patterns or it can be reversal patterns. Okay. So you have this nice candle here. So just watch these charts because they have to take out their fractal highs to continue up to their blow off top and or false break targets. Okay. So that's the Dow. Let's go ahead and move forward to the NASDAQ. Well, I got a lot of fibs on here. Get rid of some of these fibs. Looking at the NASDAQ here from a Fibonacci perspective, there's your 50 below you. When you zoom into this, guys, here's your fractal high. You're trying to hold it as support. Let me remove that so you can see this. Remember, the pattern is the same. All this money, big dumb money, flows through these assets all the same. That's why they all printed the exact same reversal pattern. And in this case, you can pull your fib from the all-time high down to your tracement low, and you're struggling right at the 786, 20,206. You got up to basically the 886, right? So if you add that to your fibs, 20,569, you came up to almost 20,500. And what's the shape you're making just looking at the chart here, guys? You're making a three-wave double top. So this is all going to play out the same way. If you pull the fib from here to here, you're hitting the 618 at 20,263. So watch 20,400 just above it. See if you can take out that fractal high of 20,538. If you can't, then you're making a double top, right? A tradable potential move in the market. Again, looking at your money flow, making a lower high as of right now. So again, bearish divergence. Momentum is still bearish as well in the daily time frame. Watch all these levels, guys. They're important levels to watch. You know what happens here. You're looking for confluence of turning points in the marketplace. That's what you're looking for when you're looking at these charts. It's not about predicting the exact level. It's understanding you're looking for a turn. You use price, you use times, you use patterns, okay? And Fibonacci levels marries right into that. And this is how you track the market for potential trade setups. Look at the DAX. DAX had the great breakout. There's your trading range. And you look at the DAX, what's it trying to do? It's trying to come back up. If it fails to take out that fractal high, which I'll denote here in a second, what are you doing? You're making a double top, and then the double top could break down and bring you lower prices, a tradable move. So when you look at this on a daily time frame, 19,661. You need to take out that level to come up to our blow off top target, our 20,160, completing the giant ABC from the pandemic low. Okay. So look for a failure below that 19,661. If it takes it out, then let's see if it can come up and take out 20,200. Key level on the DAX. You look at the ASX, the Aussie market, guys, I'm still waiting on 1618, 8,404. You're struggling. Maybe you don't even get there. We'll see if the US markets rally. I anticipate the ASX rallying and getting up to that number. I would like to see that at least. If we look at the ASX, let me get rid of this real quick, and then we're going to go over to Bitcoin. If we look at the ASX, let me expand this. You have your W here as well, right? So you see the W? You have your running W right here. So that's what we're looking at here. We look at these targets, pull from the midpoint down to that retracement low. You got right up to the 200% level and you sold off some. If you pull it from the beginning of your W right here, the fractal high, down to that retracement level low, the 1618 is just above 8404, 8522. The 1272 is right where you're struggling, right here. You see this? Let me get rid of those other fibs so you can see it better. Right where you're struggling, 8,300, 8,298 is where you're struggling. So you could be making a top here if the U.S. markets rally. Look for the continuation to come up to that 8,400, 8,500 range. If not, you could be topping right around the 83, 8,350 level. Okay, so watch those levels. Let's go ahead and move forward. Oh, I got Tesla. Then we got Bitcoin. Looking at Tesla. Good update here for retail. Retail loves to trade this stock. Lots of patterns form on Tesla. You have your bearish reversal patterns like your W's, right? So you have your W reversal. You had a 5 waves to a bottom here. You have a double top forming right now on Tesla unless you break this fractal high. So when you look at this pattern, denote the fractal high right here. That's 271. You need to get above that. You're throwing doji candles here on a 3-day chart on Tesla. So look at the momentum and everything. So far, a lower high on the money flow, off of this high, right? So you have the lower high. You need to take out 271. If you don't take out 271, what you're doing is making a double top, okay? And if the double top rolls over and breaks that neckline down there at 182, you have lower targets ahead. So key level for Tesla is 271. Watch this area, however you trade, smaller time frame, daily, 8 hour, whatever. Watch this area to see if you continue to form this bearish pattern. And overall, just look to see what the indices are doing. If they're rallying up, I'm recording this here on Sunday. If they open up hot on Monday and they start rallying up, I expect to see Tesla have some upside momentum and take out 271. And then the next level you have to watch is 300 from 271, which also coincides with your next fractal high. Let's jump over to Bitcoin. Showed you guys this on the last chart, how we could possibly finish the market here. An alternative to my 3 peaks in a domed house pattern that we were looking at is basically just the way we finished the last cycle, the dual all-time highs in 2021 here, right? So 2021 all-time high, sell-off, all-time high. It's a 3-wave pattern, an ABC move. You could do the same type of movement here. Again, if we get the NASDAQ to rally, behave more bullishly, we need to see that, I think, to have Bitcoin have some more upside. That upside, you got to take out 73,850 here on the weekly time frame, and then that could land you around the 75 to 80K range right here. And again, you can measure this, right? I was looking at this from the mathematics angle of the market, 6.5%, 7% moves between all of these tops. So I was just measuring this, looking for confluence with fibs. If you go to wave A, up to that next level, it's a 9% move. You come over here to C. This can be right about a 7% move, right at 79K again. So you want to be aware of these levels. We'll look at Bitcoin here on the daily time frame. When you look at it on the daily time frame, here's our rate cut rally. Bitcoin moved up 12%. It gave it all back, but it fell right back to the 50. It's getting a little bit of a bounce here right at the 50 moving average. So let's move this over and look at it from this perspective. So guys, I would view this the same way. If Bitcoin cannot take out this fractal high, which is right here now, right? 66,459. Then you're looking at a lower high situation being made on Bitcoin, which again is just a 3-wave pattern, right? Something like this where it could roll over, but it doesn't have to move with the markets. I'm just telling you the correlation's strong with the NASDAQ. So it matters what the NASDAQ does. You fell to the 50, you're trying to bounce up. Watch that 65.6, 65.7. Watch these ranges here. Ultimately, you got to take out that 66.5, go up to your next fractal level above 70K. You look at the money flow, you came back down to the median line. You're trying to hold this bounce. If the markets open up red tomorrow, you may see Bitcoin retest the 50 or break below the 50 because, again, it's been moving so closely with the NASDAQ, guys. You just have to watch what Bitcoin's doing. I expected Bitcoin to have a little bit more vigor, a little bit more life to it, and it's just been droopy. It's in this confined channel, right? This descending channel, testing the highs over and over again, but then ultimately failing back down. So you look at it from that perspective, it looks super bearish. But again, you look at it from the progress perspective, there's your low. Here's your new low, higher low. If this holds right here, higher low, you're making progress, but you have to break this trend line. You got to get above 66. You got to get back into the low 70s. And I want to see that last sprint, right? That last sprint to the upside. Remember in 2007, the NASDAQ did not top until November 1st. I anticipate the S&P could top before the NASDAQ, and the NASDAQ could push up, or the NASDAQ could just not make a new all-time high. We have to see. This week with the timing cycles, everything is key, guys. So I'll get the next video out for you guys next Sunday as well. Be sure to like and subscribe to the channel. Consider checking out our Discord, guys, the join button on YouTube. Hope to see you guys there. I do multiple video updates throughout the week there as well. Take care, everybody. Have a fantastic week trading. Watch those levels.